Times Influence Initiative.
Hello and welcome to the 4th edition of Times Network's India Economic Conclave, presented by Capital First, Partner in Progress, Gabon's Special Economic Zone and powered by Raven. Last week, we saw an engaging session with the Union Minister of Petroleum and Natural Gas and Skill Development and Entrepreneurship, Dharmendra Pradhan, on how to ensure energy security with strategic diplomacy, and a mind-boggling performance by one of the world's greatest mentalists, Lior Suchard.
Today, India is the number 3 energy consumer in the world. After the United States of America and China, India is the number 3rd country. We have surpassed Japan.
Is there anybody here knows the name of your first crush? No, is he here? What was the name of the first crush at age 6? What was the name? To the microphone.
I guess it was Vivek.
Vivek, like this.
The second day of the India Economic Conclave kicked off with an insightful session with Nobel Prize-winning economist Professor Joseph Stiglitz, who spoke on anti-globalization in the era of Trump, followed by a fireside chat with ET Now's Sandeep Gurumurthy. The chairman of the Economic Advisory Council to the Prime Minister, Bibek Debroy, also shared his candid views on the Indian impact of the Trump era.
Very clear that Trump has upset the normal way that people are thinking about trade and diplomacy. Trump has exploited and exacerbated the problems in globalization. These problems would have come to the fore anyway. In other words, he's brought them forward, he's heightened them, but one has to understand that there are some underlying fundamental problems that needed to have been addressed. He doesn't understand them, but he's very good at intuitively exploiting these discontents. Globalization, in the manner that it was managed by the United States, has had enormous distributive consequences on a majority of citizens in the United States. Life expectancy in the United States as a whole is decreasing. And the life expectancy of white men particularly, say, who are not college graduates, is decreasing very, very rapidly. So it is a hint that something very severe is going on. And when you look deeper into the data, you see what is some of these. The median income of a full-time male worker, and the ones who have a full-time job are the lucky ones. The median income of a full-time male worker is at the same level that it was 42 years ago. At the bottom, real wages, that is wages adjusted for inflation, are the same as they were 60 years ago. The result of this is despair. And when I said life expectancy is down, a major part of this is what we call deaths of despair. The increase in suicide, alcoholism, drug overdose, social diseases. There's no physical disease. We've really done enormously well in conquering physical diseases, but these social diseases are overwhelming and reflect something that is deep and going on. Thank you.
So let's start with 100 AD, right? So by 100 AD, Roman coins had landed in Afghanistan. A Roman merchant could trade all the way from Lusitania to Lystra. So if that Roman were to materialize today, would he see a more open world or a more closed world?
There are many aspects of openness. There weren't tariffs as you went across borders. There weren't borders. The Roman Empire encompassed it all. And your question is actually a fascinating one. On the other hand, transportation costs were much larger. Mm-hmm. And so the real distances were larger. Mm-hmm. And that illustrates what President Xi is trying to do with his Belt and Road Initiative. Mm-hmm. He's trying to change the economic geography. Mm-hmm. So they're not necessarily changing the tariffs they're doing some of that, but that's not first order. The real first order effect is the fact that you can move goods at much lower cost and much faster.
Interesting. Professor Debra, you want to comment on that? Huh?
I don't know why you said 80. I thought we were talking about 80 as in after Trump.
So from 80 to 80 is the journey we need to follow.
From the perspective of the emerging market economies, it is pro-globalization. And what does pro-globalization mean after Trump 80? And the reason for that is that if he mentioned the indicators in the US, the flip side of that is if you look at the human development indicators or whatever indicator you choose to look at, income growth or otherwise, in the emerging market economies, in all of them in greater or lesser degree, there have been improvements post-globalization. Right. So therefore, how does one reconcile this aspiration for globalization across the emerging market economies against the context of what the President of the United States is attempting to do? That's the key issue.
Mm-hmm. But, you know, I want to sort of talk about another aspect here, Professor Stiglitz, which is nationalism. I mean, one of the logic for a lot of these decisions and policies is, you know, our politicians are being driven by nationalism. And increasingly, while Trump is a sort of poster boy of that, but increasingly countries around the world are retreating to nationalism as a more comfortable space to be in. Why is that happening?
Well, I think at least in the United States, where I understand better, the growth of nationalism and nativism is when you're not doing very well, it's so much easier to blame others than yourself. And so what he's doing is the United States, the data is very clear. We've not been doing very well, even though our GDP is going up. And that's because it's not being shared. So who do you blame? You blame Mexicans, you blame immigrants, you blame trade. So you put all the blame outside. And as I say, my view is any rational analysis says, yes, we grew. So that meant we could have made everybody better off. We had more resources. The pie was bigger. But we didn't. And that was because there was a, you might call it a distributive battle, and the top won.
But Professor Debra, what do you ascribe this to? And in some sense, who will hurt the most from such a retreat? A retreat towards more nationalism, more protectionism that we're seeing around the world?
Well, everyone gets hurt, but I don't think we should blow the protectionism or the potential protectionism out of all proportion. Today, further liberalization under the multilateral system may be stuck, but there are certain set of agreements that are already in place, including dispute resolution, and they operate on the basis of certain principles, certainly insofar as areas that are covered by multilateral agreements through the WTO, the Uruguay round, is concerned. I personally think that much of what the US is trying to do, A, because it exceeds bound rates, because it violates MFN provisions, they are disputes, if taken to the WTO, that the US is bound to lose. So independent of what happens internally in the US, there are certain disciplines one has to abide by, unless it becomes WTO -1 and the globalization and its content suffer in the process. The only problem is there is an interim period because the WTO adjudication process takes a little bit of time, and in the interim, there are countries, I don't think India is ever going to be that affected, nor do I think India is going to do a Japan or South Korea. There is no need to. But all countries and all consumers get affected a teeny-weeny bit in the process.
Professor Debra, Professor Stiglitz, such a pleasure chatting with you. Big round of applause, ladies and gentlemen.
It's time now for a short break, but coming up on the other side is a thought-provoking session where representatives from the government sector and the corporate world come together to discuss what will it take India Inc. to put their money where their mouth is. Don't go anywhere, we'll be right back.
That India's growth story, which is essentially driven by the private sector, because Indian entrepreneurship is one of the best in the world.
Add up banking sector plus NBFCs plus bond market. Our estimate is this year credit growth will be about 14 to 15%, which is not bad.
Welcome back to the India Economic Conclave presented by Capital First, Partner in Progress, Gabon Special Economic Zone and powered by Raven. India Economic Conclave is a platform to create dialogue between policy makers and industry leaders, which is why the next session will see a dynamic minister and important personalities from the corporate world come together to discuss and deliberate on what it will take for India Inc. to put their money where their mouth is, and when will we see investments breaking ground. Let's listen in.
The topic is how to revive animal spirits by corporate India. Now, Mr. Prabhu, my first question I think is the obvious one. On each, important benchmark, India has gone higher, whether that is ease of doing business or governance. But if I look at a very basic aspect, which is the private sector capex, according to the CMI data, private sector capex is at a 54 months low. If I look at credit offtake, another high frequency data point, they are just not indicating that the entrepreneur is ready to bet and is ready to really risk capital.
That India's growth story, which is essentially driven by the private sector, because Indian entrepreneurship is one of the best in the world, and we have seen them succeeding wherever they go, whether they're in North America, whether in Europe, whether they're in Africa, or even in the other part of Asia. We have seen that they are succeeding immensely. So what was really holding back was this ease of doing business, because if you provide them a proper platform so that their entrepreneurship can come to fore and can blossom fully, that's the only way we can actually promote the new industrialization in India. And that's why we are proposing that even in the new industrial policy, which is now already under circulation with other stakeholders, is that we'll remove as many regulations as possible so that industry will be freed from the bonds of doing something which is not really productive, and they will be able to devote their time into doing the core activity which they are very good at, is doing business using their entrepreneurial skills.
My next question would be the obvious question, which is about fear of a global trade war. We know tariffs have been imposed by the Republican administration on import of steel and of aluminum. There could be renegotiation between the Chinese and the US. Now, India has a very large export presence, or US is a very large export partner. About 15% of the exports, they directly and indirectly go to United States. On the import front also, the number is very large. What will your ministry do to ensure that the exports which currently are low, they are protected?
There is a very strong headwinds now blowing against the global trade and against the openness of the trade that was happening for the last few decades. We took the lead. When I attended the Buenos Aires WTO meeting, I saw there that each and every country was just trying to speak about themselves rather than talking about how can they work together. Unilateral action can only harm each of the country, not only the country which is taking that action, but also the countries with whom they are trying to do business with. And therefore I said we must try to rise above this, and we said we'll organize a mini ministerial in Delhi. I announced it Buenos Aires itself, and we did that in less than few weeks, and we had 53 countries participating. I would be happy to say, and I will just quote what the WTO DG said. He said, we are eternally thankful to India for taking this leadership at a time when the global trade is under cloud. There is a lot of challenges that we are facing. At that time, India took this initiative. Wherever we have bilateral TTs, we are actually revisiting them to find out how can we open up new markets for Indian products. Therefore, that review is already on.
Let me now also, encourage Mr. R.C. Bhargav of Maruti to just share his thoughts. And I'm not talking about the consumer and the demand side, which in a sense has been robust for Maruti, but what has been your experience when it comes to manufacturing, land issues? How have things changed according to you?
Our experience throughout has been that all that we require for having very competitive manufacturing is manageable within the parameters of what we have in the country. When we decided to go to Gujarat, the Gujarat government there was very, very supportive of what we were trying to do. And whether it was getting land or getting power connections or getting the water supply or getting the infrastructure in terms of drainage and such things, there have never been any problems. And the projects have all come up on time, on schedule, within cost, and production has been as was planned. So as far as Maruti is concerned, we have really no issues about operating conditions or the rules and regulations of government, etc.
Rashesh, should I ask you the next question in capacity of chairman Edelweiss or FICCI president? Because I'll get different answers, I'm hoping.
I think you can ask in both capacities, but at FICCI we are actually grappling with the same issues. In fact, we have what is called a business confidence survey that we do, and you spoke about animal spirits. So I must say that the animal spirits are coming back. So in our surveys, we have seen that the business confidence has gone up. About 45% of the companies said they're going to make an investment in the next couple of quarters. We're already seeing, I think, renewables, we're still seeing a lot of investments. Infrastructure like roads and all, a lot of investments are going on. Automobiles, a lot of investments are going on. We're seeing financial services, agro-food processing, a lot of investments are going on. So there are industries where investments have already started, and I think this animal spirits have come back post-August.
Now, that was the FICCI answer. For the same question, what is the Edelweiss answer? If I look at credit offtake, if I look at earnings recovery, if I look at what the manufacturing sector has reported in terms of margin expansion, every year we start the year with the assumption of earnings recovery, and then brokerages just scale down the estimates. So if I look at the hard reality of data points, they are not matching.
No, I think for the first time last 3-4 months, the credit deposit ratio, credit is higher than growth in deposit. Growth in credit in banking sector is higher than growth in deposits for the last 3-4 months. So we are seeing credit pickup. And unfortunately in India, we're still seeing credit pickup from the banking sector. But if you add up banking sector plus NBFCs plus bond market, our estimate is this year credit growth will be about 14 to 15%, which is not bad.
Now let me turn to you, sir. Without getting into optimistic or realistic, let's talk about the opportunistic part here. Entrepreneurs, when they see an opportunity, when they are convinced that the regulations are strong and they think that the capital is going to grow, they're ready to commit capital. What has been your experience? Are you ready to commit to capital as an entrepreneur? You think there is going to be more return on the money invested by you?
So if you look at it in the perspective of when does an entrepreneur need to put in more capital, is to grow his capacities, and capacities grow only when there is adequate demand. And demand is based on the pickup that is happening from the consumption sector, whether you take industry, whether you take the B2B, B2C, or even exports. We have seen that there is a slight moderation, or there is a flat growth more or less in exports. But the Indian consumption story is doing pretty well. Indian industries are pretty positive on the demand that is being generated in the last few months. I think the government spending is a very key factor in the current pickup in demand, especially on the infrastructure side, and especially on the building of new roads, ports, highways, airports, etc. So the industry definitely is facing this additional demand, which was not there about a year or so ago. And from the industry perspective, I would say definitely that we are very bullish about the coming decade or so, provided that the same momentum remains and provided there is no radical change in policies.
Mr. Bhargav, closing comments from you.
I believe government's role is of creating conditions which will enable industries to compete on equal terms on a level playing field with the rest of the world. I do not think it is government's role to help industries acquire new technologies or improve their management or improve their productivity. That is something which has to be done by industry. But government has to create the enabling conditions for that. And similarly for increasing exports, again government has to create conditions which do not put Indian exports at a disadvantage. But exports will only grow if we have more and more products which are produced in India, which are globally competitive. So becoming competitive is, I think, the key to all industrial growth, growth of exports and anything else.
That's what Maruti has managed to achieve, at least in the passenger car market. So congratulations on that. Ladies and gentlemen, let's put our hands together for Minister Prabhu and the lovely panelists. They've been very insightful and very valuable.
That's a wrap from this episode of the India Economic Conclave. We'll be back next week with a special session with the brain behind India's biggest homegrown FMCG brand, the CEO of Patanjali Ayurved, Acharya Balkrishna. Goodbye for now and many thanks for watching.
आचार्य जी, तो आपका कहने का मतलब है कि जो भी फॉरेन कंपनीज है सब बेकार माल बेच रही हैं।
वो बाजार को रुख को देख करके अपना रंग बदलती हैं। हम रंग नहीं बदला, ना हम कभी बदलने वाले।
Times Influence Initiative.